Hello and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I am Zach Seward, filling in this week for Christine Lee. And joining me today are my co-hosts, Managing Editor of Global Capital Markets, Lawrence Lewitton. Hey, Lawrence, how's it going?
Hey, how are you?
And Chief Content Officer, Michael Casey. Good morning, Michael. How are you?
Howdy, Zach. Happy to be here.
Good to see you guys. All right, let's take a look at the prices. Let's go to Bitcoin first. So the Bitcoin price XPX index is currently at $47,594. Jumping over to CoinDesk, Ether price ETX index currently sitting at $3,159.92. And lastly, let's look at the DFX. That's CoinDesk's DeFi index. It is sitting at $630 at the moment. All right. So dive a bit further into the current state of the markets. Let's go to Lawrence. Lawrence, what are you seeing out there today?
Well, Bitcoin, ETH, they're kind of flat for the weekend, but the real story, the big story at least, is Solana. You and I talked about this a couple of minutes ago, right before we went on the air. We had a little bit of a debate as to what led to the jump in prices, but it's up about a third over the past week. And part of that, at least this is part of what Omkar Godbole was reporting this past weekend. A lot of it came from interest post Degenerate Ape Academy's offering there, where people were going on the Solana platform. They're like, oh, this is easy to use. Why don't I use it more? And this must be an interesting token to buy. And that helped spur at least some added bonus interest into Solana. And look, the thing has been on a tear over the past few months. It was up. It was just $1 around Valentine's Day. It would have been a great present to give. It's now about $100. So that's the big currency of the day.
Battle for the base layer really heating up. Michael, what are you watching in the markets or beyond?
Well, actually, I was just struck by the lack of real response to the news on Friday of the split, the chain split in Ethereum, with the fact that a whole lot of nodes apparently did not manage to get their software updated. This is Geth. They have to use this for Ethereum, and they split the code, which is often can be a problem if people keep mining on two separate chains. But at this stage, it looks like that chain split hasn't had a huge impact on the price. So we'll see how that goes.
Yeah, herding cats, definitely an example of the difficulties of doing so. All right, we are going to take a quick pause.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, crypto lobbyists still hope to change the portion of the infrastructure bill that would place new tax reporting requirements on the industry. And joining us now to talk about developments on the regulatory front is Jarrod Loadholt. He's a partner at Ice Miller LLP and former director of legislative and regulatory affairs at Credit Karma. Welcome to the show, Jarrod. How you doing?
I'm doing well. Thank you for having me this morning.
Yeah, thanks for being here. So, as a bit of background, you used to work as senior counsel for a pair of U.S. houses, and you know the inner workings of D.C. well. I guess my question to you is, what are industry players talking about as this crypto tax reporting provision, moves to the U.S. House?
Well, it's in the House. And so last week we had some key developments where it looks like we'll get a vote out on the infrastructure package that will include the crypto provision by September 27th. And then, it does look like that provision will likely be in the final version that will get on the president's desk. So, I think for the industry, I think there's a question now of the IRS and compliance and that kind of thing, which is like, I think, most other financial services companies, where you've got to make sure that you've got the appropriate controls in place so that you can comply with relevant tax law. And so that's absolutely, I think, something that the industry is still trying to work on with some of the, I'd say, champions of the industry on the House side. But it does look like that provision may end up being in a final version.
Jarrod, since you've had it's like a window seat on the sausage making of the legislative process in Congress, I just wonder whether you can assess, stepping back a little bit, how the crypto community's position within Washington sits right now. When we went through the Senate process, as much as it was a loss and that provision was added, there was this idea that they almost got it across the line with 99 senators supporting an amendment and losing out because of one holdout. And there was this sense that, wow, the crypto community has arrived. Its lobbying impact is there. Finally, lawmakers are paying attention. And then we move to the House, and it looks like a bit of a failure. It was just going through with the exact same provision. What's your sense generally about where crypto sits within Washington right now, and how important it is or isn't to, the strategies of lawmakers going forward?
So, I think this has kind of been a coming of age moment for the industry, where crypto, I think, has arrived in Washington, right? And they're starting to look and operate like other regulated industries in Washington. They lobby up, they hire lawyers like me who look to represent the industry. But I think in terms of where crypto lies, last week we had an announcement from Senator Toomey that he would be putting together or working to solicit comments from the industry on what a comprehensive digital currency regulatory framework would look like. And instead of just writing a bill, he's reaching out to industry first to see what they think makes sense. And I think that means something, right? That you're being asked to be a partner at the table in helping develop the framework that will ultimately shape this industry for the next decade or so. But you've seen hearings recently in Senate banking where it is evident that members are developing a working understanding of the industry. And I think that's a good thing, right? Where we're hearing hearings first. I don't want the industry to overreact to the tax provision, right? Because we've got these massive legislative proposals, $1 trillion on the infrastructure side, almost $4 trillion with the reconciliation package. They need to find ways to raise revenue, right? So crypto is not the only industry that's going to be affected by the developments in Washington. But we are seeing thoughtful approaches to legislating, which does not always happen. You're seeing, whether it be the CFTC, the SEC, you're seeing regulators take a step back and try to figure out what makes sense. And I think that's actually a good thing. And I think you've got a group of really capable advocates in Washington that are making the case for innovation and helping people understand the positive use cases for digital currencies. And that does not include what the Federal Reserve is talking about, right? Which we may very well be on the path to a digital dollar. So there are a lot of really positive, I think, developments. And I don't want this one tax provision to swallow what is the emergence of the industry in Washington and what looks like an era of thoughtful lawmaking, which, again, like I said, does not always happen.
I wanted to go back to that emerging understanding among the lawmakers, and I wanted to pin you down on sort of a letter grade, the current level of crypto knowledge in Congress. And after you venture your letter grade about how sophisticated this level of understanding is, if you could also offer some insights into how to level up that understanding in the coming months.
So the grade's incomplete, right? And as someone who's worked in Congress, there's always a learning curve. Every industry has a learning curve, right? And members are always learning, staff, they're always learning. So I think the grade is incomplete. I think how you level up I think it's really important for the industry to talk use cases, right? Cross-border transactions, faster payments. You've got entire regions of the country that for years have not been able to get payments processed. I'm thinking of the Caribbean in particular, where U.S. bank de-risking around correspondent banking has made banking difficult for entrepreneurs and business owners around the world. This is a part of that answer, right? So I think what's really important is this isn't just a guy sitting in his garage in his pajamas, buying and selling, Bitcoin, right? This is a currency that represents the future of money, the future of finance, and it helps to solve problems. And so I think one of the most important things I think the industry can do is make the case around use cases. One of the other more interesting facts that was shared with me very recently was how minority investors over-index in virtual currencies in particular. So again, we've got an asset class that is creating wealth, right, in places that more traditional asset classes weren't. So I think there are a number of opportunities here. And I think now the moment we're in is really, I think, a prime opportunity to have these conversations and to move away from the stereotypes around the currency to here's what use cases look like. here are the communities that benefit from those, and here's how to regulate this industry without killing it, right? And I think ultimately that's what we all want.
So, Jarrod, many years before you were born, probably in the 1990s, actually before even many members of Congress were born, Congress passed a tax on the yacht industry, and it destroyed it basically in the United States, or nearly destroyed it until it was rescinded. Is that threat looming in the minds of at least some of the older members that this could be an industry that will be destroyed in the United States, and that it will eventually end up in Canada, for instance, which isn't too far to move those computers and has abundant energy there? Is there is that thought at least in the minds of members of Congress, or are they just not caring and they're just trying to at least squeeze as much tax out of the industry as possible?
Well, I think they're always mindful, right, that taxes don't exist in vacuums, right? There's a cause and effect for every decision that they make. And I honestly don't believe that members approach the industry with the intent to kill it. I definitely think that there are open minds around this issue. And again, I don't want the tax provision to swallow, I think, what really is progress that we've seen from the industry in a very short period of time. Furthermore, I think there are very real concerns that there may be buying and selling of these assets without tax reporting. And, I think at the end of the day, all you can ask for is parity with other asset classes. And I think if the way things kind of work in Washington is if you want to be treated like an adult, you've got to be regulated like an adult. And I think a part of this is by bringing parity with the industry, with other asset classes, that will actually bring more members to the table, and that will move us away from, again, I think some of the stereotypes, right? That there are some, and I mean, again, sometimes they have kernels of truth, right, around tax evasion. I think that's something we can fix, right? Around, the use of illicit activities. I think someone made a point in a hearing the other day where it's like cash has been used in all kinds of crimes for years, but we've not stopped using cash. So let's move the conversation away from, this is used for illicit activities and ransomware and so forth, around what are the controls that need to be in place that exist in other parts of the financial services ecosystem that makes sense here. And ultimately, I think that helps normalize this asset in a way where, again, you mainstream it and it's treated like everything else.
Hey, well, thanks so much, Jarrod. That was Jarrod Loadholt of the law firm Ice Miller LLP. Thanks so much for joining us.
No problem. Thank you for having me.
All right, we're going to take a quick break. Coming up, we're going to check on Asia and the crypto markets. Stick with us. It's First Mover.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
All right, time now for the daily forecast to see what's happening in the Asia crypto markets. Here is Angie Lau, Forecast News.
Welcome to the Daily Forecast, August 30th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. We are now just under 4 weeks away from South Korea's new crypto exchange rules from kicking in. This has the potential to change the landscape of cryptocurrency trading in the region. That story and more. Let's get you up to speed from Asia to the world. First up, despite the strict new regulations on exchanges, crypto adoption in South Korea still going strong. New data shows nearly 2.5 million new users actually joined the 4 major exchanges in the country, Upbit, Bithumb, Coin1, and Corbit, from April to July of this year. Forecast News' Danny Park has more.
Tough regulations may be scaring off exchanges, but not investors in Korea. According to data from lawmaker Yoon Do-hyun's office, 2.43 million joined the 4 major exchanges in the second quarter, with deposits exceeding $6 billion as of July 31st. Notably, a significant number of teens and those aged over 70 are among those new signups. 28,000 of the new users on Upbit were teens who contributed to a total of $3.4 million worth of deposits held across the 4 major exchanges, while the post-Korean War generation in their 70s made over $35 million worth of deposits. Upbit continues to dominate the market as the only exchange so far to apply for a business license to the Korean authorities. One expert told Forecast News Upbit's dominance could go either way if they end up in a monopoly.
하나의 기업이 남기 때문에 가격을 자기들이 올릴 수도 있습니다. 그렇게 된다 그러면 고객들은 또 손실을 볼 수도 있다. 좀 손해를 보게 되는 거죠. 가점 체제보다는. 그렇지만 또 자연 독점이 된다 그러면 오히려 가격을 낮출 수도 있습니다. 제일 좋은 예가 전력 기업이다. 한국엔 하나의 기업만 있기 때문에 거래 비용을 낮추어서 전 세계에서 가장 전기 요금이 쌉니다.
With the new regulations set to be fully enforced from September 24th, more new Korean crypto users could be set to seek refuge in Upbit. For Forecast News, I'm Danny Park.
Meanwhile, in China, we are learning more about how deep China's ECNY efforts are going. The latest data on the progress from 4 of the country's state-owned banks, which have started to include details on the uptake of the digital currency in their semi-annual reports for the very first time, by the way, is showing how advanced this is actually going. China Construction Bank, which is one of the 4, says it alone has handled a total of almost 19 billion digital yuan, or almost $3 billion worth of transactions. Forecast News' Timmy Shen has more.
China Construction Bank, Industrial and Commercial Bank of China, and Bank of Communications all made mention of progress with the digital yuan in their reports. They say, as of the end of June, they had almost 12 million personal wallets and around 2 million corporate wallets between them. And according to Beijing Business Today, in a bid to further its digital yuan development, the Postal Savings Bank of China now has a dedicated digital yuan department in its head office. Meanwhile, in yet another example of the widening variety of scenarios the digital yuan can be used for, according to a report from mpaypass.com, an ICBC branch in Shenzhen has partnered with Tianjin-based Home Credit Consumer Finance to launch what may be the nation's first ECNY consumer loan pilot. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
And finally today, yet another crypto exchange has been hacked. This time, it's Hong Kong-based Balaxy. Balaxy's Ethereum hot wallet was attacked on August 29th with 296 cryptocurrencies worth $21 million stolen. As of the start of the trading week in Asia on Monday, the exchange's website still displayed the message, temporary system maintenance. Many users responded on Twitter not just to complain about Balaxy, but expressing broader concerns and frustrations, really, over the safety of their assets, particularly in light of the multiple hacks we've seen over the past few weeks. It is a wider industry issue here. It's clear that there needs to be more invested in the security game when it comes to exchanges. The bottom line is that investors can't trust their trades. Well, that bottom line will eventually disappear. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin again, it's currently at $47,634. Let's go over to Ether. How's it looking? Looking good. $30,165 at the moment. And lastly, we'll go to CoinDesk DeFi Index, DFX. I cannot say those letters. That number is $629.10. All right. Let's get to it, folks. We got another guest joining us now here on First Mover. We're going to be talking with Michael Venuto. He's the Chief Investment Officer at Toroso Investments, and he joins our markets discussion today. Welcome, Michael. How are you?
See everyone again.
All right, settle the score for me and Lawrence. What is driving the current rally in Solana? Why?
More buyers than sellers. I mean, look, these things happen all the time, right? People hear about it, and then research starts, right? But my latest advice to anyone coming to these markets is buy and learn, right? And they always tell you buy and hold or whatever. I'm a big believer in buy and learn. If you want to see Solana go up, 1,000% and jump on right at the end of it, you better take the time to learn about it before you just jump in.
Michael, I have to disagree with you. It's fewer sellers than buyers, but that's it. No, I'm kidding. Of course,
that's fair enough.
Yeah, we when we look at the majors, Bitcoin, ETH, volumes are back to where they were in June. It's a little bit up from July, but we're nowhere near where we were in May. Where are the flows that are coming in? Where are they coming from? It doesn't seem like it's really the kind of institutional interest we had months ago. It seems to be smaller amounts of institutional, followed by retail jumping in with FOMO trades. Is that kind of what we're really seeing, or is there something underneath the numbers that isn't apparent in at least the data that we come across?
Lawrence, I think you've got it exactly right. And I think the first guest, Jarrod, was spectacular, because I think that's why the institutional is a little bit slower right now, right? Regulation in any new industry does eventually spur adoption, but regulation, when it's first talked about, people get a little bit scared. So that, gravy train of Michael Saylor and then Square and then PayPal and NYDIG and Elon for 10 minutes and then not, that's kind of slowed down, but we see more the infrastructure builds happening like crazy. So my team and I have been traveling all over the US looking at the real companies producing and furthering the chain by mining. It is amazing. Like, at first, when I heard cryptos being discussed in an infrastructure bill, I thought, how is this even possible? And then you go see these mines and what's being built and whole towns being rebuilt around this new industry. It's absolutely amazing.
So, Michael, one area of regulation that possibly could have a very direct impact on markets is, of course, an ETF for Bitcoin. And it looks as if the SEC is leaning towards a solution that would have futures as the underlying structure for that. What's your expectation on that, and what do you foresee happening to prices ultimately when we get some clarity around it?
Yeah, I mean, ETFs is my bread and butter. I've been in the ETF industry for well over 20 years. And I've been probably one of the most bearish on the idea of a Bitcoin ETF in the near term. It does seem that tide has changed. Now, it's not the ETF that everybody really wants, though, right? Everybody wants an ETF that's similar to what Grayscale has, but doesn't trade with premiums and discounts. They want something that physically owns in a wallet somewhere the actual Bitcoin. From what appears to be occurring here is the use of futures and various other products to make Bitcoin strategy ETFs, meaning they're still going to have inefficiencies and rather large tracking error, because they're going to have the role of the futures or the various other instruments that are used. So it's kind of like they said, we're not going to go full crypto here because we don't want to do it that way, and we're going to use consistently already regulated instruments that we're going to let out there. I think it's somewhat of a quiescence, right? 4 years ago when we first launched our blockchain ETF, it wasn't to get people crypto. It was to get people the companies involved with crypto and the blockchain. That did not quiesce the desire for a Bitcoin ETF. This futures-based one, I think, could do more damage than good.
But Michael, do you think that they basically punted to the CFTC a little bit? They'll regulate the ETF aspect, but we'll let the CFTC deal with the futures part of it, the underlying, instead of us having to deal with spot. Was this sort of like an elegant way out of this problem of forcing the SEC potentially to get involved in the spot markets?
I mean, they're looking at the futures as circuit breakers, right? They're regulated instruments that when somebody pumps or dumps the price of Bitcoin, it won't manipulate the underlying ETF product the same way, because the futures will regulate for that. Similar things happen in the oil markets and all that sort of stuff. But if I look at TradFi, traditional finance with ETFs, you can go and see the gold ETFs that own physical gold are gigantic. There's one gold ETF that owns futures. There's hardly any assets in it. That's how it'll play out in the end. So even if we do get this futures-based product, it's just a stepping stone. And when the physical does eventually come, like the ones we see in Canada from Purpose and Evolve and 3IQ and Galaxy and whatnot, those will be the dominant ones. I just think this is a stepping stone. This is a test to see if manipulation in DeFi can affect TradFi.
Michael, notwithstanding the conversation we had previously about the interest of institutions and the role that the regulation is playing and maybe scaring some people off right now, is there also a seasonal factor here? And I'm wondering what you expect to happen once we move out of the classic quiet period of the summer and into a more active Wall Street, as is traditionally the case in September.
Yeah, it's funny to think that Wall Street has any impact here, but it is starting to be that way, right? It is a bit frustrating because you've got retail that participates, and then you've got institutions that are now starting to get in. My friends over at OnRamp are now trying to help the RIA community get involved as well. I do think that we're still likely to see that 100K number by year end. I do think things are going to heat up. I don't see anything that's not working, right? I just see a little bit of a malaise, and most of the bad news that was actually good news is now starting to be realized, right? The move of the miners from China to here, the fact that crypto is discussed in an infrastructure bill is gigantic. Yes, taxes stink, but we were supposed to pay them anyway. So if you're going to live here and you're going to trade Bitcoin or hold Bitcoin or buy and learn crypto, you're going to pay taxes.
Well, that's a good message. That's a good message to close on. Pay your taxes, folks. There's no getting away from taxes. Shout out to Ben Franklin. We appreciate you. All right, Michael, thanks for joining us today. Appreciate your insight as always. And we are going to change gears and talk about regulatory stuff with Nick Day. Stick with us. It's First Mover.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination, in the form of cultural creativity, is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
Welcome back to First Mover. It is time to check in with Nick Day. He's our managing editor of global policy and regulation here at CoinDesk. Nick, how are you, sir?
Hey, good morning. I'm good. How are you?
Good to see you. I'm doing well. I'm filling in here this week. It's going to be fun. Let's chat about this Fed accounts thing with Avanti, Kraken, and potentially others. Give us the TLDR on that. What's going on?
Yeah, so a number of traditional banks are kind of opposed to the idea of let's call them, new types of chartered financial institutions, i.e. crypto banks or crypto companies that are seeking to become like banks from getting access to the Fed's master accounts. It's been, it's kind of the old versus new story with the crypto angle here. Crypto companies want these Fed accounts because it gives them access to, certain privileges and certain tools that traditional banks have that crypto companies have traditionally been locked out of, especially exchanges that, have lacked banking partnerships to facilitate transactions or to, conduct their operations. So we've seen this kind of play out over the last several months. The Fed's even put out a request for a comment on, giving access to master accounts to some crypto companies. And, now bank institutions and bank organizations are saying, this is a bad idea. It's a bit of a risk.
So what's been the reaction from the crypto community? Are they looking at this and saying, hey, guys, why are we selling out? Or are they saying, oh, wow, look at that. Washington's finally paying attention to us. We should be part of the system and not revolt against it as originally planned?
Well, it's really the second one, right? Because it's not just necessarily revolting against the system here. It's making sure that, crypto exchanges can conduct operations, right? Right now, one of the biggest issues we've seen time and time again with crypto exchanges is that because they don't have stable bank access, they can't necessarily conduct, fiat to crypto transactions or crypto to fiat transactions because they just do not have the access to the capital necessary to do so. So, this has been an issue or been a story since at least May when the Fed first put out its request for comment. And, groups like Kraken and Avanti want access to master accounts because this will let them conduct more services and, in particular, conduct more services that the industry frankly kind of needs, better access to.
Nick, I don't want to get conspiratorial here, but it's funny when we start having these conversations, a lot of the theories around the way that Wall Street does or doesn't support the crypto community's positions within Wall Street become really interesting, right? Because ultimately they do have that capacity to turn off the funding, as you said. And the one thing they probably really care about is being competed out of business by these new players. And this is a realm in which they directly do so. So, is the thinking that it's really Wall Street, for example, and not, say, the defense industry that got Shelby to shift his position on the infrastructure bill? How important is Wall Street, I suppose is my question, as a kind of an opponent to crypto lobbyists in Washington generally?
I mean, I think there definitely there's quite a bit of Wall Street that's opposed to this idea of the crypto industry getting more influence in Washington, D.C. I'm not sure what role they played in the infrastructure bill fight, at least as far as the crypto provision went. But, there's definitely no denying that there are, just this week, the Wall Street Journal reported that a bank lobbying group is pushing back against this idea of crypto banks and crypto industry getting a bit more influence. So there's definitely something there, but I'm not sure what the direct connection might be.
All right, Nick, we're going to leave it there. That's Nick Day. He's the best in the biz, folks. Follow him and sign up for Nick's State of Crypto newsletter over on the new CoinDesk.com. Thanks, Nick. That's it today for First Mover. Thank you to my lovely co-host, Michael Casey, Chief Content Officer, Lawrence Lewitton. He's our Managing Editor of Global Capital Markets. I am Zach Seward. I'm our Deputy Global News Editor. I will be back here tomorrow. We'll do it again. Can't wait. Have a strong Monday, and we wish you well as you tackle this week ahead. Thanks so much. We'll see you soon.